And now we are going to talk about equity crowdfunding. And I would like to invite on stage Sean Kane, co-founder and CEO of F-Success, Ricardo Sequeira, startup community builder at Cedars, and Dilian Dimitrov, founder at 11 Accelerator, and Alejandro Barrera, co-founder and chief wellness officer at Press42 and Tech.eu. Take it, Rusty.
Thank you so much. Guys, you seem, yeah, you can see. Okay, just let's fix this. Sean, where the fuck were you? There we are. Okay, so guys, just before we start, can we all like stand up? Let's stand up, everyone. There you go, the first one. That's a good startup. We need to talk afterwards. You can jump here like a little bit like this. Everyone, don't be shy. Let's jump a little bit. You guys are stiff. You know, you're not clapping. You're not saying any shit. Come on, guys. You're here to enjoy this, okay? So we're gonna have a really fun panel. Thank you very much for everyone. That guy over there he was the leader. He was the first one to stand up, by the way. So we're gonna have an interesting panel on crowdfunding. It's a really broad topic. I just want to bring three notions on the table. We're going to talk about something that's called equity crowdfunding. Please do not confuse with a regular crowdfunding, which is I give money to something that's really cool and I'll get a t-shirt in return. Okay, that's not what we're going to talk about. We're not going to talk about crowd lending, which is I'll lend you my money and then you have to give it back to me. Not going to talk about that either, hopefully. But we're going to talk about equity crowdfunding, which is I give you money and I own a piece of your company. And like me, there's another 1,000 retards that believe in your company and will give you the money, okay? So to start, once we have that on the table, to start, I would love that you guys intro yourselves and you tell what's your position or how do you see your companies in reference to equity crowdfunding. So we have Sean from F-Success, which is a very successful startup platform for entrepreneurs. We have Dilian from 11 in Bulgaria, VC guy, one of the biggest funds in the region. And we have Ricardo from Cedars, which is one of the top, if not the top, equity crowdfunding platform in Europe. So I don't know if we start with Sean. What's your position on equity crowdfunding? How do you see that relating to your company?
Sure. So F-Success is the platform for the startup ecosystem at a global level. There are about almost 20,000 startups on F-Success, which may be the largest in the world, that have listed funding rounds in some way or another for about $4.3 billion, I believe, in aggregate. We really see equity crowdfunding as a market that's certainly exciting, and it is definitely part of the movement that we're seeing now in the same way that Yahoo gave way to Google when there was just too much damn information on the internet, and sort of email and address books gave way to Facebook when your mother was on the internet and you could organize it. And in the same way as platforms that are emerging like F-Success, actually physically meeting investors over time, it's not going to be overnight. It's still a tiny market. It's growing very quickly, but from a small base. But in the same way that those markets changed, the old model of sitting in front of people, in the same way we used to go on Yahoo and look for links and you used to manage all your friends in your address book, you will go to an online platform and it will add value in the transaction. What kind of value will it add? We're going to find out over the next 3 or 4 years. It's incredibly early today.
Yeah, what's your position on equity crowdfunding?
All right, so we don't have anything to do with equity crowdfunding, so that's my position. No,
it's like fuck equity crowdfunding.
Die.
No. We have a few. I mean, just in a few words, what I do. I'm one of the founders of 11, and 11 is a venture capital fund. We invest between 25,000 and 200,000 euros in early stage startups from the region. We're based in Sofia. We've made 83 investments so far for about 7 million euros, out of which five are Romanian companies. So generally, our kind of take on crowdfunding is it's an alternative to what we do, and I believe it's a great thing. And as Sean said, it's going to grow very much in the next couple of years. But my perspective is from what we currently do, and I can just talk about the kind of the parallel lines between what crowdfunding is not and what equity investing is not.
Yeah, we'll talk about that later.
And now it's me. So I'm Ricardo. I'm the startup community builder at Cedars. As Alex said, we're one of the leading, if not the leading, equity crowdfunding platform in Europe. So we allow entrepreneurs to raise capital, obviously from the pool of investors that we have registered on the platform, but also from the wider communities that might be very interested about what you as an entrepreneur are building. And on the other end, allowing wider pool of investors to take advantage of investing in companies that might yield a substantial return. And that's about it, yeah.
Okay, so I'm seeing more and more startups that they try to raise money with VCs, they can't. They go to business angels, they can't. And some of them turn to equity crowdfunding to raise money. So it would be interesting to see what's your opinion on when and if should startups actually raise money using equity crowdfunding? Or if you don't get money from VCs or angels, should you just quit or bootstrap your company instead of heading towards equity crowdfunding?
If you can't raise money anywhere else, there is no money dumb enough to give it to you online, in my opinion. And I'm very happy to be disagreed with other people on the panel. The trend that we see on F-Success, and from what I understand, the trend that most of crowdfunding sees, and this even applies to the t-shirt case, I think, is if you don't know where at least half your money is going to come from before you go online, you're not going to get the other half, right? This is something that we're in this in-between phase where you're going to know a lot of the people, or the people that you know will know other people that are going to come into your round. It's something you have to work your ass off at. This is not easy, like just list up and like eBay, it sells like that. Even on eBay, like 80% of things don't sell, right? So this is a tough process that people are valiantly trying to figure out how to add value to, but it's not a replacement for many of the elements of traditional funding. It's a new way of doing things that will help you and does add value in new and interesting ways. But you don't just list yourself up and sell out in 5 minutes.
I actually agree. I mean, in the first instance, I mean, if you're not going to get the word out about the campaign that you're actually promoting, you're not going to get funded. It's not just about creating a pitch, listing it, and waiting for somebody to come and just fund you. That will never happen. I mean, you need to prepare, preempt part of the capital, drive it through the platform, get a strategy to involve both the people around you, and as Sean said, the people, obviously, that get to the outreach that you generated after the network effects that the people around you helped you build, but also target the communities of interest around your business. I mean, my firm belief is that going forward, there's going to be more and more active and passive capital being part of the rounds of the different startup companies. And that's what's actually happening today. You see angels, prominent angel investors, as well as venture capital firms investing and bringing deals into equity crowdfunding to allow these businesses to have, on one end, a bigger amount of capital to actually be able to get to those milestones that they need to achieve in order to then get the follow-on investment from larger VCs, etc. So on one end, demystifying the risk is just, it's not just post and wait for the money to come. That will not happen. You won't get funded. And on the other end, indeed, I definitely believe there's a complementary aspect to how equity crowdfunding could evolve, but not as a mutual exclusive option, rather much more as a way to kind of pool both extremely strategic and value-add investment as well as community-driven investment. So if you have maybe the 100 or 150 people that really get what you're doing, that maybe are your users, that might become your beta testers, your ambassadors, and even your connectors. And on the other end, you have those 2-3 angels that are going to be super valuable for the further development of the business itself. So, yeah.
Yeah, just my take on that. I wouldn't consider crowdfunding as the last resort for funding. I mean, even that kind of reward-based crowdfunding, it's a way of getting some money. I would say if you go crowdfunding, ideally you have a few anchor investors, so people that have already invested and they can take care of the investors' interests. Because if you just go out and list on any crowdfunding platform, then there is no one established leader of these people that can actually have some input and say on what you're doing as a company. So just as Sean said, if you can find the first half of the money, it's going to be much easier to get the second half. But for investors' perspective, we like this as a sort of co-financing. First of all, because we share the risk with a bunch of other people, so we give half the money, and then other people give the other half. And also for us, it's a validation. So if these guys that are crowdfunding right now can convince 50 other people to give them 2,000 euros each, then there's got to be something that kind of, maybe we saw it and we decided to give them half. But there is some validation for us that, yeah, this thing makes sense.
Yeah, I was going to ask you, like, do VCs actually like getting companies that have money from equity crowdfunding, or you would rather have them first raise money with angels, then get into equity crowdfunding?
My personal take, ideally, we will know the company and we'll encourage them to go crowdfund for a second round or a larger round, and then we'll be part of that round as well.
I think, just to add to that point, one of the key points for VCs, when considering a business that it has crowdfunded or is going to crowdfund before they actually are ready for VC investment, is structure. And if you end up with 200 investors in your cap table, I guess you'll just say no when they come to you and ask you for capital. But there's a lot of equity crowdfunding platforms out there with very different structures, regulated, non-regulated, and it's up to the founder to do that due diligence to understand if the structure that the platform provides when structuring the deal. On average on Seedrs, you get 200 investors, but you got one legal shareholder, which is an important thing when looking at the platform. So my biggest advice is do the due diligence, look into it, and then decide what's better for your business. If you're building a traditional business, maybe having 100, 150 investors in your round, it's okay, because that might be the only round that you'll do. You won't need to go for VCs. You won't need to go through the whole funding landscape that a tech business that has recurring rounds of capital actually will need to. So it's a case by case. My advice is definitely do the due diligence.
That actually brings me to a very good question, is there's specific startups which make sense to do equity crowdfunding and some that don't make any sense to get into equity crowdfunding. What would be the differentiation? Which kind of startups would you highly recommend you should actually first raise equity crowdfunding money and then come back to us? Because there might be a specific type of startup that you tend to see recurrently.
Yeah, I think when new products come to market, they aren't the right thing for everybody straight off, right? When Japan started making TVs, they didn't start making massive color TVs. They started making these shitty little black and white TVs, and they sold like crazy. And I'm not saying startups that crowdfund are necessarily bad startups or good startups, but clearly one of the points that was brought up, I think, was right on, which was if you're a startup and you've started your round off and you've got money from other folks, go out into your crowdfund round. And one of the beautiful things about crowdfunding in one of the iterations that's going really well right now is you can pile up a bunch of people that put in $1,000 or £1,000 or 1,000 euros into your round and have them focus into a single entry on your cap table, which as a startup in Europe in particular, you don't want to manage 1,000 investors on your cap table. You just can't. So a lot of crowdfunders have come with amazing products like Seedrs that focus in on that and allow you to take money that you just couldn't have taken otherwise because it would have been cost prohibitive. There's also some hybridization, I think, going on in the market. There's one in the United States that I respect quite a bit called Fundable, I think it is. That's actually taking Alex's t-shirt market and combining it with the equity market, right? So you get stock, but you also get the t-shirt. So even if the stock is worthless, at least you got a really nice t-shirt out of it, right? And that's the kind of market we're in, right? Where people are still trying to figure out the niches. It's not right for everyone, but it is right for a lot of guys.
I agree with all of that. I just want to add one thing. We've had all sorts of businesses raising through the platform, from very B2C sorts of propositions, but also, I think roughly 30% of the businesses that raise via the platform are B2B businesses. They might not be the encryption-based software that, if you give me the two-liner, I will not understand what it actually does, but it's, even if it's a B2B product, it might resonate with a group of people. So products and services, businesses that resonate with a variety or a group of people, a community or customers that might want to invest, people that might already be using your business and that would just love to take part as an investor, being a little bit more involved in the further development of the business, that works. So, I mean, if you'd ask me what sorts of business work in crowdfunding, it's definitely stuff that people get, stuff that businesses that have an audience or that can build an audience through the round itself, because crowdfunding is a inherently really open way of raising funds. So you can reach out with a link to a wider variety of people. Then it's up to you to focus on the people that actually you want to bring and that are most likely to get involved with your business.
Yeah, well, what he said. No, what I'm saying, if you're building a very specialized, tool for developers and nobody understands it, it's difficult to create a hype around it, so people will just hop on the bandwagon and just invest in you. But if it's something that people like and understand and relate to, they're much more likely to commit and give you some cash. So yeah, some projects are more kind of sensible for crowdfunding, and these are the things just the average Joe can understand and relate to and fall in love with.
Okay, three of you actually work to some extent with communities. So F-Success works with a large community. You've been literally spearheading in Bulgaria and the Balkans area the community, startup community, investment community, and of course you guys at Cedars. So all three of you have actually touched community somehow. So what do you think the community needs, like in a country like Romania, to make equity crowdfunding work? Okay, because I believe, and Ricardo, you know this, I was talking with Jeff, and he gave a lot of good reasons that need to be there, a lot of things that need to pre-exist in the country to get equity crowdfunding as something at a reasonable level that everyone can actually use it on a day-to-day basis.
I think I don't like to use the word education because
it's a nice word.
You don't educate the market. You empower people to actually be able to use the tools that you provide them. I mean, empowership of the community. I mean, the panel that we're doing here, getting people to understand the threats, the benefits.
Let me check that. Are you guys feeling empowered right now?
Yeah.
Come on, guys. Do you feel empowered right now?
Empowered to invest.
Is there a point where you say, yeah? Well, kind of. We're getting there.
Kind of. We'll get there. So a lot of this, a lot of providing information and getting people used to the product, I guess it's something that is important. But on a much kind of broader sense, it's getting both sides of the market excited about this. Both the individual investor that might not have the capital or enough sense of a portfolio overview to actually invest 50, 100, 200K in the 10 to 20 businesses throughout, I don't know, let's say 3 years, but maybe might be able to be involved with less capital at a time, and on the other hand, have startups equipped with the insights, the tools, and the knowledge to actually be able to then reach out to people and get that capital into their campaigns. That's what I would say.
Yeah, I mean, this is a classic marketplace problem, and that's why we're where we are now and not where we'll be in 4 years, where you have demand side and supply side, and they're tied together with this rope, and you can move one side together a little bit, and have startups that can put together their pitch well, and then have investors move a little bit, but you can't take giant steps, right? The market is going to grow slowly, but at high rates because it's small for a little bit, as you get investors that understand it and startups that understand the product. One thing that I've seen a lot, and I don't claim to be the expert on it, you guys probably know more than I do, is I think actually this might be a great product for Romania in a lot of ways, and there is an opportunity in the sense that crowdfunding tends not to be for the big guys. The big guys already know how to get deal flow, right? They're looking for these billion-dollar exits. They have people that have the golden ear, right? That can detect Ubers, right? Partners in VC funds are supposed to have Uber detectors inside of them. They can say, you're an Uber, I'm going to invest in you. This is not about that. This is about medium and small guys, from my perspective, putting relatively smaller amounts of money into more stuff in general. So it could potentially be a great market to solve problems of capital availability in Romania for startups.
Just one thought. It's always like that with investment, including stock exchanges, private equity, angel investing, and everything else. If you have a few success stories, so my neighbor, he invested $1,000 and he made up 10K, in less than a year. That's what's gonna drive a market. So generally, as Sean said, it's a slow start, but when you get your first success stories, then people will just want to do more like this. And then this kind of is self-fueling success story, because when you have more crowdfunding successes, more people will do it. And then you'll have even more crowdfunding successes, and then more people will hear about it and try to do this investment. So it needs to be like the first time people start talking about this. That's going to fuel a faster growth.
Okay, so we do have 5 minutes to take some questions. If we have some questions from the audience. Okay, we have one there, one there. They're taking it to the other side.
I'd first like to say that I'm a big fan of crowdfunding, except I have one worry that's never really been resolved, and that's that most people don't know how to do venture capital valuations. And I'm afraid that people actually buy things off of crowdfunding, buy equity into companies without being able to do a proper valuation. And I'm afraid of a similar pump and dump type program. Let's say someone has access to a major blog, posts a lot of stories about that startup. They also own it. Then they crowdfund it, sell themselves out, high valuation with very little value, which most people don't realize. So my main question is, how can crowdfunding progress and grow out of this instead of, I don't know, possibly risking ripping a lot of people off? Is it regulation, for example? I don't know.
I don't think regulation would be the solution here. They're concerned about other sides of the whole paradigm rather than the valuations. Even before I start answering the question, then there's also the side of okay, that guy got an amazing deal out of the crowd, but then he goes out to VCs afterwards and he's not going to be able to raise because he probably raised at a too high valuation before, going to do a down round, screws himself up right from the beginning. That's kind of where I see things. Don't do it just because you might get a great deal first, but then you go for your second round and it's just not going to work. In terms of what we're trying to do to help to kind of educate the market and empower the market, we're not opinionated with regards to which valuation you should bring to the platform. We definitely tell you to, it's up to the entrepreneur to decide what valuation he wants to come to the platform, but in the end, we advise them to go and talk to more experienced people in the ecosystem, to look into platforms like F6S, like AngelList, and many others to see at what stage, at what valuations other businesses in the same market as you have raised. You can do that very easily with the amount of information that is online at the moment. And then, you could also proxy it to the IPO market. When you go and before you go out and launch an IPO, you are doing a roadshow to understand what's the price per share that you're bringing to the market. So my advice is to definitely go out to the market and understand what valuation is right for you.
I also agree that regulation necessarily isn't the answer, but the one thing I wanted to say is, what if it happens the other way? Let's say a VC invests in a company, finds out it doesn't have enough revenue, so they just put a huge bunch of money in marketing, get traction, and then using that marketing to basically sell themselves out using crowdfunding.
Let me give you my perspective. Each emerging market is going to face these kinds of fraud and fraudulent behavior. That VC you're talking about, people will hear about it, and these people will be out of the market next day or next month. So VCs generally care about their reputation more than their returns. So from that perspective, a venture capitalist will never try to screw up like the general public. But to your question, how will this be regulated? People will invest in dumb deals at crazy valuations. That's going to keep happening. Don't worry about that. That's going to phase out on its own. People will get more educated the more this thing kind of happens. And at some point of time, there will be kind of a market-based valuation. And the other thing, usually you have your current investor chipping in half of the new round. So if these guys are happy with a certain valuation and second, they care about their reputation, that will be kind of a market-ish valuation, so there is nothing to worry about. So go for deals that have already, commitment of half the round. These are pretty safe.
Yeah, you can then afterwards talk with Dylan about Bitcoin. He's a big fan of that. We had a question over there, I believe, and another one there. But first,
I have the mic. If I have the mic, I have the advantage.
Oh, come on, man. These guys were first, actually. So please. Very fast, so we're running out of time. So you first, you second, and no more questions. Because they're going to kill me if not. There she is. The boss is killing me.
Okay, so I have the conch now. Since he mentioned regulation, actually, I'm actually curious about the legal overhead on this sort of situations. You mentioned that the fundings might be 150, 200 people. If you're, let's say that that's what you end up crowdsourcing your equity to. If you're a small 5-6 person startup, you get, let's say $2,000 for each. Now you get about $300,000. That's not going to last you very long. And now you have the legal overhead of having 200 investors that I imagine you, depending on the country, it is going to have different strings
Keep
attached.
it short, please.
So I get exactly what you said. So basically, you, as I said, do the due diligence. There's platforms that do it for you. There's other platforms that leave you out to dry and ask you to go and find your lawyer and try to structure it the best way you could. I'm not going to pitch Cedars too much, so I'll just tell you to...
You're just empowering them with Cedars.
I'm just empowering people.
Which one is Cedars, I wonder?
So we have one over there. So essentially, I believe that what you all are saying is, equity crowdfunding is not for the faint-hearted. You need someone to guide you through it. It's not like anyone can do it. You can. I mean, you can do it, but you will get screwed.
Yes, thank you. My name is Bogdan. I come from the Bucharest Stock Exchange. And I have a question for you, Dilian and Ricardo. Please tell me about the transparency. How willing are the people that you meet to be transparent in the way they do business, regarding also the due diligence process that you mentioned before? But also, how important is the transparency in the early stage of development for a company? If sharing, let's say, results, plans, and so on to other people at the early stage of development, how can this affect the evolution of the company? We'll detail this later after the event, but this was just my initial question for you.
So,
very short answers, please.
So, very quickly, two things. With regards to what an investor sees, I mean, everything that is on the platform has been verified by Cedars, Cedars being an FCA-regulated platform, approving the pitch as a financial promotion. Very quick answer. With regards to disclosing information, I mean, nothing beats execution for a startup. You need to execute fast to win your market. If you don't execute, you'll lose with regards to competition. You don't need to disclose actual business plans, financial projections, and stuff like that. If other investors on the platform reach out to you via the Q&A, email you, etc., and you want to have a chat with them via Skype, via face-to-face, whatever, you can do. And if they ask you for more information, and if the investor is then asking for more information, it's up to the startup to disclose it. You can ask him. So, why are you asking me all this? What's your ticket size? Ask him. Be open about it. He'll have to answer. If you're being open, he'll be open as well.
You guys want to add?
Yeah, one last thing. Having an anchor investor helps you out. So these guys already invest in these people. They've given them money. So they'll be very careful what these people's plans are. I mean, I'm not pitching us as accelerator, but having an anchor, it's an angel, it's an accelerator VC, that's going to help you out.
Sean?
I think they said it really well. I don't have anything to add.
Okay, guys. Well, this was careful. This was all. So it was a big pleasure having the three of you guys. I hope you guys enjoyed it and you felt really empowered. So big round of applause for these three giants. Thank you very much, guys. And